Good afternoon, and thanks for attending today's webinar on investment options within superannuation. We will give everyone a few moments to join the webinar and we'll be commenced shortly. Thank you for your patience. Okay, guys, we'll start the session. My name is Jack Sheriff, and I'm a member account specialist with Brighter Super. An important part of my role is guiding our valued members towards a comfortable retirement by giving them a better understanding of their superannuation account. Not surprisingly, one of the things I get asked about the most is the investment options that are available. By the end of the webinar, we aim to give you useful information to help you understand your options. I'll also be asking you some questions as we go through the webinar to help you get a better understanding of the content. I'm also joined today by Callum Van Meegen, one of our trusted financial advisors, who will speak to you about about how advice can help you make the right investment options or decision for you, and also Silas Dangiria, one of our member account managers, who will be monitoring your questions in the chat today. Now, before we get things underway, Brighter Super acknowledges the traditional owners of the lands we meet on today, and we pay our respects to elders past and present. We are proud to serve Queensland's 17 Indigenous councils, and we strive to provide positive outcomes for our members who identify as Aboriginal and/or Torres Strait Islander. Now, it's important to understand that the information and examples contained in this presentation are general in nature and have been prepared without taking into account your individual objectives, financial situations, or needs. It is important when making decisions about your super options that you obtain the relevant product disclosure statement and target market determination and consider your own personal circumstances. You can access these documents and the financial services guide from the Brighter Super website. Today's presentation will run for about 30 minutes. Many of you have submitted questions already, which we have tried to incorporate into the presentation. You can also post questions in the Q&A feature during our presentation today, which we'll aim to answer directly. Now, we do have Silas Dangiria standing by as our moderator today. Silas has been with the fund for about 4 years now, and they've been regularly out in the field providing super health checks to members in different regions all across Queensland. Say hello, Silas.
Thanks, Jack, for that introduction. Thank you. And I'm looking forward to hearing you going through this investment webinar this afternoon.
Thank you so much, Silas. Appreciate that. We should have time for questions at the end, and we'll try to answer as many as possible. But I'm actually also joined today by one of our financial advisors again, Callum, who will be presenting a little later on. Would you like to introduce yourself, Callum?
Yeah, it's about it. Good afternoon, everyone. Yeah, happy to be here.
So thank you so much, Callum. Again, we'll be running through some poll questions throughout today's web presentation. So when the questions pop up on your screen, please just click and answer that as appropriate to you. So who is Brighter Super? This is for our non-members online. The merger between LGIA Super and Energy Super, plus the acquisition of Suncorp Super, has enabled us to increase our size and scale, yet remain committed to investing in the personalised member services that you know and enjoy. We service over 280,000 members with more than 35 billion in funds under management, and we received the #1 performing growth options for super and pension over 7 years to 30 June 2025. Now let's talk investments in super. You're able to make a number of choices about your super, one of the most important being deciding on how your super is invested. The investment options you choose could make a big difference to your super balance over time. There are various factors to consider when making your decision. They include how long your money will be invested, also known as your time frame, how comfortable you feel with volatility or your risk appetite, the levels of return you expect, referred to as your return expectation, the other investments you have and the importance of diversification, and the amount of money you're investing outside of the super guarantee payments or additional contributions. We will cover these in today's presentation. The member online portal contains important information such as your current balance, the contribution received during the financial year, the cost and level of insurance you hold, the nominated beneficiaries that may be on the account, that may be on your account. There we go. And also your yearly investment performance and the fees and the costs. More importantly, it allows you to manage and update your investments online. You can also find the information on your annual benefit statement found in the member online portal under statements and letters. So now you know where to find what investment option you might be in. Let's take a look at what investment options may be available within superannuation. Some people think of their super as a single investment, but it can potentially be invested in many different asset types. Most super funds offer different investment choices. Investment options offered by super funds can either be a ready-made mix of different asset classes or a single sector options, which are invested in just one asset class. Diversification can be achieved by choosing a ready-made diversified option, such as a growth or a balanced investment option, or by choosing your own mix of single sector options. Investment choice is the ability to select which ready-made option or asset classes you wish to be invested in. Now, moving on to our first poll question. Do you know which investment option you're currently invested in? Yes or no? Hopefully that's popped up for everyone. Great. Amazing. Thank you so much for those that have confirmed. We'll now move along. Now, let's talk about assets in more detail. You may have heard of investment options described as growth or defensive. Assets such as equities, otherwise known as shares, are described as growth assets. These may see volatility over the short term, and the value may go, up and down, but over the longer time periods, they generally experience higher growth. These are the options shown in green on the screen. Asset classes like cash and fixed interest are described as defensive options. They carry less risk in terms of volatility and capital loss, but they also offer less potential for higher returns. The purpose of defensive assets is to provide stability in times of market volatility. You can see these in the yellow on the screen. Ready-made diversified options are made up of different mixes of growth and defensive asset classes. These are shown in blue on the screen. Now, if you decide to log into your member online to see where you're invested, the quickest and easiest way is through the investment tab on the left-hand side of the screen. Simply click on that tab to see where you're invested. This page will show you which investment option you're currently in, the number of the units held, and the unit price as well. If you'd like to switch the option that you're invested in, simply navigate to the bottom of that page and note that you can select more than one investment option. There is a button labeled Change Investment. You can change you can then follow the instructions to change the option that you're in. It will ask what percentage if you choose multiple options. We've discussed investment options tonight and how Brighter Super offers a wide range, so you can make a choice that best suits your needs. You can change your investments at no extra cost and at any time. Investment options vary from fund to fund. Some super funds define their investment options in terms of their risk characteristics, such as growth or balanced strategies. You do not have to make an investment choice. If you choose not to, your money will be invested in a default investment option. For Brighter Super, that is our My Super option. Depending on your personal time frame, risk appetite, and return expectation, this may not be the right option for you. It is important to understand that everyone's personal situation varies and everyone's attitude to risk and return is different. If you're not sure or what some of these terms mean, rest assured we will discuss these in further detail. You may have heard the phrase, past performance is not a reliable indicator of future performance, which, when hearing super funds talking about their actual returns. This is not just something that they say to absolve themselves from any responsibility. It's a very important thing to remember. So let's have a look as to why this is important to understand. This is one of my favorite slides that we often use in our presentations. It shows the performance of 7 different asset classes plus one ready-made diversified option over 15 years. Let me take a moment to call out the grey boxes, which represent the ready-made diversified portfolio. For the purpose of this presentation, it is not the asset classes themselves that is important, it is their performance over time. As you can see, there is not one asset class that has consistently outperformed another. The cost striking feature of this chart is that over the 15 years, asset classes have performed differently at different times. Sometimes the best performer one year is not as strong the next year. This is what super funds mean when they say performance is not a reliable indicator of past performance. This is one reason why super funds may look at taking a diversified approach to investing. By spreading the funds across different asset classes, they can balance the volatility by spreading the risk, by not putting all of their eggs in one basket. As called out on the previous slide, the grey boxes that we can see on this slide is the ready-made diversified portfolio. So that is a mix of all the different asset classes. We can see that by diversifying, it has smoothed out the highs and lows of the single asset classes and provides a less volatile investment choice. We mentioned another consideration that people should take when choosing their investment options is their actual time frame. How long they will be leaving their funds invested for and how long they'll be investing before they actually need to access them. Everybody's time frame is different, just as everybody's attitude towards risk is different as well. So to discuss this and some of our resources we have available for our members, I will hand it over to Callum.
Beautiful. Thank you, Jack. Good afternoon, everyone. As mentioned a little bit earlier, my name is Callum. I'm one of the financial advisors here at Brighter Super. Today, I'm going to take you through some of the tools that we have available to assist you in making decisions about your investment options. Cool. And next slide. Cool. And the first one I'm going to talk through is the investment risk profiler. So often one of the questions that I'm asked is, what is the best way to invest my super? And as you can imagine, there's not one single investment option that would be a fit for everyone. In fact, there are a number of different things you need to consider when choosing the right investment option for yourself. And one of them is being a risk profile. So what is a risk profile? A risk profile is an individual measure of how you feel about risk and return. It takes into account your risk tolerance, market volatility, as well as your investment timeframe and desired return outcomes. We'd all love high returns without volatility. However, generally speaking, the more risk that we take, the higher the return you may expect over time. However, the increased chance of short-term volatility with those investments as well. As an example, a growth investment option is expected to generate higher rates of return over the long term, However, it may fluctuate more during times of market volatility. On the other hand, a conservative option is likely to have fewer negative return years overall. It may not drop as far as a growth investment option during a downturn. However, the trade-off of that less downside risk is that the returns are expected to be lower over the long term. Understanding your risk profile is important to help you prepare for market volatility and make more informed decisions. The concern with being invested outside of your risk profile is that if you're invested too conservatively, you may be missing out on potential returns that can impact the longevity of your funds in your retirement. However, if you're invested too aggressively, you may see greater volatility than you're comfortable with as well. Both of these scenarios may not result in the desired outcome. That is why it's important to understand what your risk appetite is. Beautiful. Okay, so talking through the risk profiler questions. So you can find our investment risk profiler tool on the Brighter Super website under the resources tab. It goes through and asks 8 questions on topics such as how you feel about negative returns, what action you might take during market volatility, and your superannuation goals. After answering each question, it will then provide you with your result and some information about the type of investor you are based on those responses. When answering the questions, I would encourage you to consider the bigger picture though. None of us like to see negative returns. However, this is where understanding and knowing your investment timeframe becomes relevant. As an example, someone in their 40s and you still have 20 years of being able, until you can access your superannuation, a negative return may feel very different compared to someone who's considering retiring in the near future. However, it is also important to note that even if you're close to retirement, your investment timeframe may be longer than you think. Retirement isn't necessarily a line in the sand where you just stop investing in superannuation, and many members move to a pension account where their funds will remain invested, and then investment returns can fund your retirement for the next 20 to 30 years. Brighter Super also has a variety of different pension options, and we encourage you to contact us to find out more. Cool. So risk profiler outcomes. So it is really important to note that the risk profiler tool doesn't actually provide you with a recommendation on how to invest your superannuation. After completing the online tool, if you wish to receive some help on choosing the best investment options for you, you can book an appointment with our Brighter Super intrafund or superannuation advisors. This type of advice is included in your membership. The conversation is done over the phone, and it usually takes around 20 to 40 minutes. The advisor will go through a similar process with you, asking you a series of questions to determine your risk profile. But what is helpful is they'll also tailor it to yourself and the specific questions that you might have. Importantly, they'll also make a recommendation on where to invest your superannuation funds and provide you with a statement of advice to confirm that. This written report refers to your risk profiler, the investment mix that is being recommended, and it also outlines the changes in any investment fees as a result of this advice. We also offer a range of personal advice services, which we'll discuss a bit more detail later in the presentation. And thank you very much, and I'll pass you back to Jack.
Awesome. Thank you so much for that, Callum. We will jump across to our next poll question. Would you consider using the risk profiler tool? Hopefully that pops up for you guys. It's a good little tool for us to use. So again, as Callum said, please jump online to find that one. Awesome. Move along. So we understand that there is a lot to think about when considering your investment options. The good news is that there is help available from Brighter Super. What makes Brighter Super different to other super funds, you might ask? Well, it's actually our commitment to personal service. We have a dedicated team of member account specialists here to support you. If you'd like to talk to one of our staff one-on-one for more general information about your superannuation, then why not book in for a super health check? A super health check covers a variety of areas, including what we're talking about today, your investment choice. If you'd like to book now, there is a QR code on the screen. And you'll also receive a link to book a super health check in the coming days alongside today's webinar recording. Our team services members through both face-to-face and also digital channels, so you can get some general guidance on a range of superannuation topics no matter where you live or work. So Brighter Super offers a range of personal advice options suited to individual members' needs. If you're looking for specific information about making contributions, investment strategies, or your insurance needs, the intra-fund advice team that we previously mentioned can assist. Two of the most common questions members ask as they approach retirement are, how much super do I need to retire? And secondly, do I have enough super? A retirement health check with one of our financial advisors will help you answer these questions. We also offer scaled and comprehensive advice. The scaled service, the scaled service provides advice on specific topics such as moving into a transition to retirement account or a pension account. Comprehensive service takes a holistic view of your financial situation to tailor advice to suit your individual needs. The cost will depend on the complexity of the advice, and this cost can be deducted from your Brighter Super accumulation account. It's never too early to start planning for your future, so talk to us to find out how we can help. Similar to today's webinar, our seminar webpage covers a range of upcoming webinar topics. Keep an eye on this page as we update it regularly. If you register for any webinars, regardless if you attend, you will receive a copy of the recording the day following the webinar. On the previous two slides, we discussed our range of advice services. These cover our super health checks and our intra-fund advice, both of which are at no additional cost to our members, to the other types of advice, such as the retirement health checks, scaled and comprehensive advice. Our next poll question for you is, after today's webinar, are you planning on getting advice? Yes or no? Awesome. You guys, glad some of you are looking to take that opportunity to get a bit of advice, which is good. So, guys, I have covered a lot of ground today, or we have, and you can also visit the resources tab and then forms and info sheets on our website for more information on the different forms and topics that we discussed today, and with those information sheets. So, on that note, it's now over to you, Silas, for any questions, and I will ask Silas, our facilitator, to come back for the Q&A. And also Callum just to come back as well on the screen if we need. But guys, just during the Q&A, I'll revert back to the Super Health Check slide just to give you all a bit more time if you want to book in for an appointment. But over to you, Silas.
Thanks. Thank you, Jack, for your presentation. I always found it extremely interesting, especially how you are able to explain the different types of asset classes. Before we jump in, quite a number of questions have come in before we start on the Q&A. I just wanted to give another general advice warning. It is important to understand that similar to the webinar itself, the information and examples we give in these Q&A sessions are general in nature and have been prepared without taking into account your individual objective financial situation and needs. Now, I got a question for you, Callum.
Yep.
This has come straight from Noel. Noel wants to know, does the risk profile questions come with a glossary to explain the investment jargon?
No, to put it simply, it doesn't. And I guess in my opinion, it's a good starting point, the risk profiler tool, the one available online. But that can be a real advantage of speaking with one of the intra-fund advisors, is that they can help break down this jargon. And I know that we are quite poor at sometimes using too much jargon. So what I'd suggest to get around that is, if you're doing the risk profile tool and anything seems even vaguely unclear, it's a really good opportunity to arrange a meeting with the intra-fund advisors, and they can talk to you in more, I guess, plain English, and get also get a recommendation on how to invest the money based on those results from the risk profile questionnaire. So unfortunately, no glossary, but we do have those resources here to help you support it by a person.
Just a follow-up question on that one too, Callum. When we are there, I've got a question from here, which is asking, what is the difference between stable option and cash, and what are the components of stable investment?
Sorry, say that again. Sorry, Silas.
What is
Stable
the difference
versus...
between the stable investment option and the cash investment option?
Yeah, cool. So the cash option is plainly only invested in cash. So it's a single investment class. So it's only invested in cash. There'll be foreign exchange and obviously Australian currency. The stable option is a diversified investment option. So what that means is it's not just invested in one particular type of investment, and it's invested in a diversified option of all different investment options. So the stable one is quite a conservative investment option in nature. So it will hold a significant portion of cash within the investment option, but it will also hold the other investment options as well. So fixed income, Australian shares, international shares, property, infrastructure. So taking on a little bit more risk compared to being just in cash.
Excellent. Thank you very much. And before you go, I've got one last question for you. I've got a member who is asking, what is they're currently in my super investment option, and they're looking at moving into the pension, and they're looking at investment with similar investment profile. From Brighter Super point of view, between my super in accumulation and the pension, which investments have got similar characteristics?
Cool. So I guess a similar asset allocation, or a similar level of what we call growth investments, which are those investments that do give us that higher level of volatility, but also the growth. It'd be the balanced investment option, which is roughly around 3/4 allocated to those growth investment options, and then 25% into the defensive options. But there's no categorical like for like with the MySuper product, because it is something that can only be accessed in accumulation. But the closest one that we'd have would be the balanced investment option.
Thank you. Thank you very much, Callum, for that. Very well explained. And I always find your answers very, very, very clear to understand. So that's the questions that we have received, and we've tried to answer a lot of other questions which came through the presentation. And I'm going to hand you back to Jack to wrap up this session, please.
Thanks so much, Silas and Callum. And thanks to everyone for sending through those questions. It's always good to see you guys getting involved. Again, thanks so much for taking the time to come along to attend our webinar today. We actually do have one last poll question before we bring things to a close. So please answer as you leave. But overall, how satisfied were you with today's webinar? Again, guys, just answer that. But thank you so very much for attending today's webinar, and we hope to speak with you soon. Thank you.